preparation of cash book. In our learning of the cash book, we are going to be looking at the 1 column cash book, the 2 column cash book, and 3 columns cash book. Within our studies, we are going to take into consideration how credit sales, credit purchases also affect the cash book. As we have earlier defined, the 1 column cash book, otherwise known as the cash account, is an account that records only cash transactions. It does this by debiting all cash received and all cash paid out. We are going to also be looking at how transactions from the cash account will be posted to the ledgers and how we can extract the trial balance from the postings. So let us go to the board and take down a question on 1 column cash book. At this stage, we are going to be looking at the cash book. The cash book will be segmented into 1 column, 2 column, and 3 column cash book. So let's take down a question on 1 column cash book, otherwise known as the cash account. Illustration on 1 column cash book. 2021, January 1st, Mr. Victory commenced business with cash of $7,000. January 2, purchased goods for cash $4,000. January 3rd, sold goods for cash $1,500. January 5th, paid rent $500. January 6th, paid for stationaries $100. January 8th, paid for traveling expenses $150. January 9th, paid for hire of land $50. January 10th, cash sales $450. January 13th, cash purchases $700. January 15th, withdrew cash for personal use $200. January 16th, paid for wages $80. January 20th, paid for traveling expenses $150. You are required to prepare for Mr. Victory Enterprises A. 1 column cash book. B. Post transactions to ledgers. C. Extract a trial balance. So we are preparing for Mr. Victory Enterprises 1 column cash book. Then on the debit side, we have the date, particulars, folio, and amount. On the credit side, we have the date, particulars, folio, and amount. Of course, date of transaction will be written here. The type of transaction will be written here. The folio number, if any, and the amount involved in the transaction. The same is applicable on the credit side. Date of the transaction, type of transaction, folio number, and amount involved in the transaction. Now the first question reads, Mr. Victory commenced business with cash of $7,000. Now, I put myself and yourself in the position of the cashier that has opened the cash book or the cash account. Now, we ask ourselves, when the owner of the business brings money to us to hold so that the business will start, are we receiving cash or are we giving out cash? The simple answer is this. cashier receives cash from the owner of the business. Therefore, my cash book will be debited for receiving cash of $7,000 from the owner of the business. So what do I do now? I go and debit my cash book with $7,000 and credit the capital account representing the owner of the business that brought the cash with $7,000. So the transaction becomes debit the cash book with $7,000 and credit the capital account with $7,000. Now we debit the cash account with capital of 7,000 naira on January 1st, 2021. This represents the amount received from the owner of the business. The owner of the business here is Mr. Victory Enterprises, and this cash book is being kept by the cashier. So the cashier having received from Mr. Victory the sum of $7,000 debits the cash account on 2021 January 1st with capital of $7,000. Remember, it was Mr. Victory Enterprises that gave out the money to the cashier so that the business will commence. Now, Mr. Victory becomes the giver and is represented by a capital account. So this account, the capital account, is opened to represent Mr. Victory. And we have credited the capital account that is representing Mr. Victory for giving out cash of $7,000 on January 1st, 2021. January 2 purchased goods for cash $4,000. Now the question is, I'm the cashier, you are the cashier. When we are purchasing goods, the question is, do I give out cash or do I receive cash? It is an expenses for purchase. And remember that the double entry principle states that we debit the receiver and credit the giver. So at this point of purchase, are we the giver or are we the receiver? I become the giver because I'm giving out cash so that goods will be purchased. And automatically, I go and credit my cash account with $4,000 spent due to purchases. And then open the purchases account and debit the purchases account with the same amount, $4,000. The reason is that purchases account is the reason why the cash of $4,000 went out. Therefore, purchases account becomes the receiver and will be debited. So in this transaction, we credit the cash account with $4,000 and debit the purchases account with $4,000. So we credit the cash account for giving out $4,000 for purchases on January 2, 2021. And since purchases is the cost of the money going out, purchases becomes the receiver and is debited with the cash of $4,000 on January 2nd, 2021. So the effect of this transaction is that purchases account is debited while the cash account is what? Credited with $4,000. January 3rd, sold goods for cash, $1,500. Does cash come in or does cash go out? Cash came in because of sales. So sales is the giver. The money was received as a result of sales. Therefore, sales is the giver. Therefore, we debit the cash account and credit the sales account. So we debit the cash account with $1,500 on January 3rd, received as a result of sales. Since the cash was received as a result of sales, then sales is the giver. We therefore credited sales account with $1,500 given to cashier, cash represent cashier, or given out as cash on January 3rd, 2000. So we debited the cash account with sales of $1,500 on January 3rd and credited the sales account with $1,500 being sales made and the cash sent to the cashier. January 5th, paid rent $500. The question is, I am the cashier and I have my cash book or the cash account. When I pay rent, do I give out cash or do I receive cash? The simple answer is, I'm giving out cash because of rent. Therefore, we credit the giver and debit the receiver. I am the giver, giving out the money as a result of rent. And why did I give out the money? Because of rent. So the rent account will be debited because rent account is the receiver. So we debit the rent account with $500 cash on January 5th, 2021. Rent is the reason why the money was spent, so rent is the receiver. The cashier that gave out 500 naira as a result of rent, the cash book has been what? Credited on January 5th. So in this transaction, the rent account was debited while the cash account was credited with rent of $500. January 6th, paid for stationaries $100. The question is, when I'm paying for stationaries, am I giving out cash or am I receiving cash? The answer is, I'm giving out cash. And since I'm the cashier and I'm giving out cash, it means that I should be credited. The cash book is representing me. Therefore, the cash book will be credited for giving out cash. And why did the cash book give out cash? Because of stationery. So stationaries is the receiver. Therefore, we go straight and debit the stationaries account for receiving $100 from the cashier, while we credit the cash account representing the cashier for giving out $100 for the sake of stationaries. So we debit the stationaries account with $100 received from cashier represented by cash on January 6th, 2021. Why the cash book representing the cashier is credited on January 6th, 2021 with $100. So in this transaction, the stationaries account is debited while the cash account is credited with $100 spent in respect of stationaries. On January 8th, paid for traveling expenses $150. Now when I'm paying for traveling expenses, I'm giving out cash. Therefore, the traveling expenses will be debited because I gave out the cash in respect of traveling expenses. And traveling expenses account, being the cost of the money going out, is a receiver and has to be debited. So in this transaction, we debit the traveling expenses account with $150 and credit the cashier with $150 given out as a result of traveling expenses. So we debit the traveling expenses account with $150 on January 8th, 2021. Of course, the source of the money is cash, represented by cashier. Then, we credit the cashier on January 8th with $150 given out as a result of traveling expenses. So in this transaction, the traveling expenses account is debited while the cash account is credited with $150 given out in respect of traveling expenses. January 9th, paid for the hire of plant $50. We hired a plant and we are paying for it. Therefore, the cashier is giving out money or we are giving out cash. and the cash book will be credited for giving out cash for the hire of plant. Therefore, the hire of plant account will be debited, while the cash account will be credited for giving out cash for the hire of plant. So we debit hire of plant account with $50 received from cash on January 9, 2021. And we credit the cash account or the cashier with $50 on January 9th, 2021, spent in respect of hire of plant. So the cashier is giver, while the hire of plant account is receiver. January 10th, cash sales $450. The question is, I'm the cashier and we sell. When we sell, does cash come in or does cash go out? The answer is cash comes in. And when cash comes in, it is the cashier that has the sole responsibility of receiving cash, no other person. So at this moment, we recognize that cash is coming in. The cash account will be debited for receiving cash as a result of sales, while the sales account will be credited for being the source of the money coming in. So we debit the cashier or the cash account for receiving $450 as a result of sales on January 10th, 2021. And we credit the sales account with $450 on January 10th, 2021. Of course, sales account gave her the cash and was credited. If you watch, we have sales on January 3rd and sales on January 10th. Two transactions in respect to sales. Even if we have 5 transactions, even 20 transactions, it must be recorded only in one sales account. Even if we have 20 transactions in respect of sales, it will be recorded just in one sales account. You cannot open 2 sales accounts except it's a balance carry forward. It must be in one sales account so that at the end of the month or the period, we calculate the whole sales and know how much we have sold for the period. The same is applicable to all other accounts like capital, purchases, rent, and so on. If you introduce additional capital, it will still be recorded here so that at the end of the period, we know how much that was introduced as capital. If you pay rent 10 times, it will be recorded just in one rent account. And at the end of the period, we total the amount to know the amount we spent as rent. So we open one account for every transaction. As every transaction in accounting seems to be independent. January 13, cash purchases $700. When we purchase goods, cash goes out and the cash account is credited. While the purchases account, being the reason why the cash went out, will be debited. So we debit the purchases account with $700 on January 13, 2021, received from cash. While the cash account was credited with $700 given out as a result of purchases on January 13. So in this transaction, the cash account was credited while the purchases account was debited with $700 in respect of purchases. January 15th, we drew cash for personal use, $200. When you hear the word withdrew, it appears as if the cashier is withdrawing money. No. When you hear the word withdrew cash for personal use, it applies to what we call drawings. The only person that has a right in a business to withdraw cash for personal use is the owner of the business. And when this happens, it is called drawings. Therefore, it is the owner of the business that has approached the cashier at this point to give him or her some cash for personal use. So at this point, the fact remains that the cashier is spending. Cashier is paying who? The owner of the business, giving some of the company's money or the business money to the owner of the business, since the cashier is under him. So at this point, it is the cashier that will be credited. That is, we credit the cash account with the amount given to the owner of the business, $200, and open a drawings account to represent his ability to collect cash or withdraw cash for personal use, and then we debit that drawings account. Therefore, we open the drawings account representing the owner of the business ability to collect cash for personal use and debit it. And we credit the cash account or the cashier for giving out such cash to the owner of the business. So in this transaction, debit drawings account with $200 and credit the cash account with $200, representing the amount given to the owner of the business for personal use. So we debit the drawings account for receiving $200 from the cash or cashier on January 15th, 2021. And we credit the cash account or the cashier for giving out $200 to the owner of the business represented by drawings on January 13th, 2021. The drawings account is representing the owner of the business ability to collect money for personal use. It can also show any stock drawings made by the owner of the business. That is when the owner of the business collects goods from the business for personal use. It will also be recorded here. January 18th, paid for wages, $80. Of course, when we are paying for wages, the cashier is giving out cash and has to be credited, while the wages account, causing the money to go out, is the receiver and has to be debited. So we debit the wages account with $80 received from cash or the cashier on January 16th, 2021. And we credit the cash account or the cashier with $80 given out in respect of wages on January 16th, 2021. January 20th, paid for traveling expenses, $150. When you hear the word paid, it means cash was paid. For instance, paid rent, paid salary, paid for office expenses. Once the word paid is used, and the question did not state that it was paid with check, it means the payment was made with cash. Therefore, in this instance, paid for traveling expenses means that $150 has been paid in respect of traveling expenses. Thus, we credit the cash account or the cashier for giving out $150 for traveling expenses and debit the traveling expenses account with $150 cash. So we debit the traveling expenses account with $150 cash on January 20th, 2021. And we credit the cash account on January 20th with $150 given out or spent in respect of traveling expenses. Now the question requires us to open a one-column cash book, that is cash account, for Mr. Victory Enterprises and post the transactions to the various ledgers. We have done that now, and the part of the equation that remains is to extract a trial balance. Before we can extract a trial balance, we have to balance all the accounts. It is the balances from all the accounts, including the cash book or the cash account, that we are going to use to prepare the trial balance. So let us balance all the accounts that we have opened. stationaries account. We have to make the two sides to be equal. Here is 100, so we also make this side to be 100. This account traveling expenses, 150 plus 150 is 300, so we also make this side to be 300. Hire of plant account is 50. We have also to make this, we make this side also to be 50. This one is 200. We also make this one to be 200. 80, we make it to be 80. This one is 7,000 on the credit side. We place 7,000 on the debit side. This one is total of 4,700 on the debit. We place 4,700 on the credit side. This account is 450 plus 1,500, which is 1,950. So we write 4,950 on the debit side. The rent account is 500, so we place 500 on the credit side. What are we really saying? The two sides of the account has to be the same. So we do that now. So you can see the stationaries is 100 here. We place 100 here so that the two sides will be equal. Traveling expenses 150 plus 150 is 300. So we place 300 here so that both sides can be equal. The hire of plant is 50, debit. We place 50 on the credit side. On the dollar column, 50, then the two sides become equal. The drawings account is $200 on the debit. We posted 200 on the credit so that they become the same. Wages account is 80 on the debit. Then we place 80 on the credit so that the two sides becomes equal. The capital account is a credit account. It's on the credit, 7,000. So we recorded 7,000 here so that the two sides, that is the debit side and the credit side, becomes equal. The sales account is 15 plus 450 is 1,950. So we paste or recorded 1,950 on the debit side so that two sides becomes equal. The purchase account total is 4,700. So we wrote 4,700 on the credit so that two sides can become equal. The rent account is on the debit, 500. We recorded 500 on the credit so that two sides can be equal. Now, we are doing this because we are still on the foundation stage. We are supposed to be doing it independently. That means we finish everything about stationaries account before we go into traveling expenses account and hire purchase account and so on. But I'm doing it this way to enable you to know the secret of balancing an account that usually pose problems to some students. Now, this 100 on the credit side that makes the two sides to be equal, what do we call it? We call it balance carry down. That is closing balance as at the end of the month, January 31st. So we are going to write here January 31st. We call it balance carry down, CD. So that is the representative of what the 100 becomes. Since in the stationaries account, the whole amount written there is 100, assuming we have another amount and another amount, then we add all and put it and record it at the credit side. And we call it balance carry down. That means we are closing this account with a record of $100. And that is what we do to other accounts. For stationaries, we have January 31st, balance carry down, CD, C/D means carry down, 100. We also have traveling expenses. January 31st, balance carry down, CD, 300. We have hire of plant. January 31st, balance carry down, 50. January 31st, for drawings, balance carried down 200. For wages, January 31st, balance carried down 80. So you can see the two sides has become what? Equal, as a result of we initiating balance carried down. For capital account, which is on the credit side, you can see the balance carried down is on the debit side. And yet, the two sides are equal, 7,000, 7,000. Then, for the sales account, the total balance is on the credit side, $1,950. You can see, it now becomes on the debit side, balance carried down of 1,950. The same is applicable with purchases. You can see January 31st, balance carried down 4,700 on the credit side, since the total balance of purchases is on the debit side. For the rent account, the balance is on the debit side, 500. You can see the balance carried down 500 on the credit side. Having done this, the first stage of balancing have been completed. We have not balanced the cash book or the cash account. We are coming to that later. Let's balance these minor accounts first. Now the next stage of our balancing is to rule across. Give some gap and rule across double lines for each of the accounts. And bring down the 100. That is the next stage. And under, you give some gap for the initiation of either the balance brought down on the debit side or on the credit side. So you do this in all the accounts. Remember, when you are doing it, just give a little gap before and what? After. So we bring down the 100 and bring down the 100. You can see these lines are the same. So the 100 is extended downwards and the 100 is extended downwards here. For the 300, we bring it down and bring this 300 down here. The same line. They must be on the same line. We have the 50, we bring it down, we bring down this 50 down and rule lines across them. The same for drawings, we bring down the 200 on the same line and we rule lines across them. Observe that the last lines are double lines, or you can use shaded lines or double lines. So wages, we bring the wages down 80, 80, both on the balance carried down figure and on the real figures. We do it for the whole account. For capital account is 7,000, we bring it down. We still bring down the balance carried down 7,000 and rule across. Double lines to end the lines or shaded line. We have the sales account. The total is 1,950. We bring it down. And also bring down the balance carried down on the same line. For the purchases account, the total is 4,007. We bring it down on the debit side, and the balance carried down, we still bring it down on the credit side, 4,007. The same line. We do that for sales. Bring down the 1,950 on the debit, balance carried down. Also bring down the real figure on the credit, 1,750. For rent account, we bring down the 500 and the balance carried down 500. We bring it down, all on the same line. Make sure that the rulings are straight, so that your work becomes neat. So for all the account purchases, rent, capital account, sales, wages, drawings, hire of plant, traveling expenses and stationaries, the whole balances are brought down, still on the equal line. So you can see, firstly, we have made the two sides to be the same by initiating balance carried down for account that has a debit balance. Also for accounts that has a credit balance, we made the two sides to be equal by initiating a balance carried down on the debit side, and then we bring down the balances. Remember, we said give a little gap here and a little gap here to make our work look neat. Then under, you leave some gaps here. As you can see, in all the accounts there are gaps. These gaps here will enable you initiate your balance brought down. You can leave, if you don't give a gap and it's so close, this account is so close to this, you will not be able to write any figure here. And that figures that you may write here or here will be the balance brought down. Balance carried down we have used represents closing balance. So the next thing we are going to do is to initiate our balance brought down. The next stage is for us to get our balance brought down. This is balance carried down. BAL, abbreviation for balance. CD, abbreviation for carried down, that is closing balance. And here it is 100. That made the two sides to be equal. We bring it down, I'll bring it down. Now this balance carried down does not end here. Any balance carried down goes to the other side of the account to become the balance brought down. For instance, since the balance carried down in stationery's account is on the credit side of the account, the balance brought down must definitely be on the debit side, under this 100. Now, I bring this 100 directly to the other side of the account, under the same dollar line, under the 100, under this 100. The 100 is directly under this figure and under this figure. Just here. Not here, but directly under the closed figure. So this 100 is brought to the debit side and it becomes the balance brought down. So for the travel expenses account, this is the balance carried down. Then we take the 300, bring it under here, it becomes balance brought down. Balance brought down represents opening balance for the next month. Let's take the sales account. The balance carried down of the sales account is on the debit, 1,950, which is the closing balance in sales account. So, showing that the total amount sold is 1,950 at the end of the period. Now, to establish the balance brought down, this 1,950 will be brought to the credit side, just under the same figure. Not here, but under here, 1,950, and it becomes balance brought down, which becomes the opening balance for February 1st, since this accounting period ended January 31st. What it implies is this, that when the balance carried down is on the credit side of any account, the balance brought down will be on the debit side of that account. On the other hand, when the balance carried down is on the debit side of any account, the balance brought down will definitely be on the credit side of that account. The balance brought down of sale being on the credit side implies that total sales, which is a credit balance, is still 1,950 on the credit. So let's do it to stationaries, traveling expenses, hire of plant, drawings, wages, capital account, sales account, purchases account, and rent account. Let's establish all the balance brought down. Just the figures alone first. For the stationaries account, the balance carried down, which is 100 on the credit, is brought to the debit side under the figure. For the traveling expenses, the balance carried down is on the credit 300. We bring it directly at the debit side under. And we have for hire of plant 50 on the credit side. We bring it under the figure on the debit side of hire of plant account. All these things becomes the balance brought down. For the drawings account, we have 200 on the credit. We bring it under the figure on the debit, that is the balance brought down. For wages account, the balance carried down is on the credit side, 80. Then we bring it to the debit side under the figures, that will represent the balance brought down. The same is applicable to capital account. The balance carried down is on the debit, 7,000. As you can see, 7,000 is written on the credit side, and this becomes the balance brought down. For sales account, the balance is on the debit, 1,950. You can see it, we transferred it to the credit side. That becomes the balance brought down. For this account, the balance carried down is on the credit side, 4,007. You can see this 4,007 is taken to the debit side under the figure. That becomes the balance brought down. For the rent account, the balance carried down is on the credit side, 500. You can see the 500 is taken directly under this 500 on the debit side. So what this implies is that for any account that has the balance carried down on the credit side, the balance brought down definitely goes to the other side, which is the debit side, just under the figures. So to re-establish the balance brought down, it becomes by February 1st, balance brought down. For all the accounts that have their balance CDs on the credit side, we establish all their balance brought down on the debit side. Remember that the account ended by January 31st, 2021. So the next month is February 1st, and that is when the balance brought down begins. Balance brought down represents opening balance for the new period or new month, while balance carried down represents closing balance for the end of the month or the period. Also, for traveling expenses account, you can see February 1st, balance brought down 300. For February 1st, balance brought down 50. That's for hire of plant account. For the drawings account, balance brought down February 1st, 200. For wages account, balance brought down 80 on February 1st. For the capital account, the balance brought down February 1st, balance brought down is on the credit side, 7,000. For the sales account, February 1st, balance brought down is 1,950 on the credit side. For the purchases account, February 1st, balance brought down is on the debit side, 4,700. And for the rent account, February 1st, balance brought down 500 is on the debit side. Now to balance the cash account, of course the cash account has the headings labeled: date, particulars, folio amount on the credit side, date, particulars, folio amount on the debit side. Now, if you compare this ledger to these ledgers, you discover that the smaller ledgers does not have the labelings on top. For instance, here represents the date, here is supposed to be particulars, somewhere here is supposed to be the folio, and here is supposed to be the amount. But usually, under examination condition or answering ordinary questions, we could use these ledgers without labeling them for the sake of time. However, if your examiner demands that you must label these smaller accounts in this way, then you have to do it. Now, going back to the cash account or the cash book, one column cash book, you discover that we cannot just establish the balance CD anywhere, here or here. The reason is very simple. Once there are records at the debit side and at the credit side of any account, then before you can establish the balance carried down, you must add the two sides and find out the greater side. The side that has the smaller figure will now bear the balance carried down. So what we are going to do to balance this account is to add 7,000 plus 1,005 plus 450 and get the figure. And also we add the credit side 4,000 plus 500 plus 100 plus 150 plus 50 plus 700 plus 200 plus 80 plus 150 and find out the total amount. It is only when we have gotten the total amount on the credit side and the total amount on the debit side that we can now establish our balance CD. This is also applicable to these small accounts. However, in all these our recordings or transactions, the records were just on one side, making it possible for us to establish our balance CD on just one side without any problem. But in this instance, we have to add the two sides to determine the balance carried out. So let's do that now. If we add the debit side, total amount received by the cashier, $7,000 plus $1,500 plus $450, it gives us $8,950. Then total amount spent by the cashier, 4,000 plus 500 plus 100 plus 150 plus 50 plus 700 plus 200 plus 80 plus 150 gives us 5,930. If you watch, what I did was very simple. I took into consideration this line. The last recording ended here. So I gave some gap. Of course, this gap will be to contain the balance carried out. I gave some gap from here because this contains more figures. So this is where I'm taking into consideration before I establish this ruling, these two rulings. The total on this side is 5,930. Now, once we give the appropriate gap and close the account with double line, the same line goes here, the same measurement. And what determines the figure that will be inside these boxes, this and this, is the side that has the greater figure. The debit side, total received is 8,950. While the credit side, representing the amount spent by the cashier, gives a total of 5,930. Therefore, it is the amount that was received that is greater than the amount paid out. So we use the greater figure for these two boxes. Bringing this figure here, we remember that this figure represents total cash received by the cashier for the period. And adding from year to year gives us 5,930, which represents total amount spent by the cashier for the period in cash. Now, we find the difference between this and this. The total amount received by the cashier, which was transferred from here to here, is 8,950. If you deduct the total amount spent from this, it becomes 8,950 minus 5,930. That gives us 320. So we write it here. Now, 8,950 total amount received minus 5,930 representing the total amount spent, we have 3,020. This 3,020 is representing the closing balance, that is balance carried down or balance CD in the cash account. If I receive a total of 8,950 and spend a total of 5,930 in 1 month, and to give back the owners of the business or the owner of the business at the end of the month a total of 3,020. That is 8,950 amount received minus 5,930 amount spent. So when the cashier gives back this amount, the cashier is credited and the account becomes balanced. How is the account balanced? Total amount spent plus total amount remaining at the end of the period must give the total amount received for the period. And this amount becomes the balance carried down. So the cashier will be bringing out or giving out 3,020 as the closing balance of cash. And that is why it is credited, because at this point, the account is to be balanced, so the cashier needs to bring out this money and give to the business. So by January 31st, 2021, the balance carried down in cash account is 3,020, representing the amount that will be demanded of cashier to bring out or give out to balance the account. If you add back 3,020, representing the amount that the cashier will bring out, plus 5,930, representing the amount that the cashier spent, the two of these gives us 8,950, representing the total amount that the cashier received. And now we establish our balance brought down by taking this 3,020 to the debit side. So 3,020 becomes the balance carried down on January 31st, 2021. Of course, month end is January 31st. So we transfer this 3,020 to the debit side of this account under here, and it becomes the balance brought down for February 1st, 2021. So we now have our balance brought down, the balance carried down brought to this debit side, and it becomes the balance brought down for February 1st, 2021. So what is the implication of this 3,020 balance brought down on February 1st, 2021? You can see the balance brought down is on the debit side, and debit side means the total amount received for the period brought down. What it means is very simple. It means that Mr. Victory Enterprises spent $5,930 out of $8,950 received. Therefore, at the end of the period, it is only $3,020 that can be declared as the amount